Good morning, everyone, and happy Monday. Today is the 8th July 2024. The US dollar, represented by the US dollar index, has continued to fall, reaching a 3-week low of 104.82. This decline was driven by weak June non-farm payrolls data, which pushed the index below 105 last Friday. As the US economy shows more anti-inflationary signals, confidence is growing that a rate cut will happen in September. However, the Fed officials are maintaining a data-dependent approach and avoiding an immediate rate cut, while acknowledging the difficulties in the labor market. The US labor market report showed cooling conditions, boosting expectations for a Fed rate cut at the September policy meeting. This led to a fall in the dollar. The Fed swap market is now fully pricing in 2 rate cuts by the end of the year. However, the timing of these cuts will depend on how the Fed officials interpret current labor market and inflation data. For market reactions, the traders are selling the dollar and interest rates are plunging due to the promising prospect of the September rate cut. The June non-farm payroll showed slowing wage growth amid rising unemployment, reaffirming that the US economy is slowing down. The dollar's decline last week was also influenced by political developments in the UK and France, which pushed the pound and euro higher against the dollar. Even the yen strengthened slightly against the dollar. After the release of the worse-than-expected non-farm payrolls data, the US dollar index fell below 105 to a 3-week low of 104.82, closing down for a 7th consecutive trading day. Traders seem to be reducing their long positions, and the index may plummet to last month's low of 103.99. On the upside, the 10-day simple moving average at 105.57 and 105.52, 23.6% Fibonacci retracement of 102.35 to 106.51 have turned into resistance. The 14-day RSI is moving sideways around 43.8, showing a lack of rebound momentum. This could push the index down further to test 104.75. For a day moving average, if the index falls further, it could drop to 104.43, 50% Fibonacci retracement level, or even 104 and 103.99, June 7 low. On the other hand, if the 10-day simple moving average of 105.57 is recovered, the next key levels are 105.95, upward channel center axis, and 106.05, last week's high. The WTI crude oil prices dipped over the weekend as the likelihood of the Gaza ceasefire increased, offsetting strong summer fuel demand and possible hurricane disruptions in the Gulf of Mexico. The WTI crude oil rose 2.1% to $83.45, and Brent crude fell 2.34% to $87.63, both marking their 4th consecutive weekly gains. Earlier, the WTI hit its highest level since April at $84.56 per barrel. However, the prospect of the Gaza ceasefire reduced the Middle East risk premium, pressuring prices. Despite this, the strong US summer demand and the largest drop in US inventories in nearly a year fueled the bullish sentiment. The US EIA reported a 12.2 million barrel drop in crude inventories, far exceeding the expected 700,000 barrels, indicating tight supply. Crude oil has been trading in a high range between $81.81 and $84.65 from June 4 to last weekend. The oil prices surged 15%, showing a strong upward momentum. The short-term moving averages are bullish as long as prices stay above the psychological barrier of $80. Most will test higher levels. Key targets are $83.68 and last week's high of $84.65, with further resistance at $86.26. The gold surged to a 6-week high of $2,393 last week, extending its upward momentum. The optimism of about a faster-than-expected Fed rate cut and a weaker US dollar contributed to this rise. The US non-farm payrolls report on Friday further boosted gold as the unemployment rate rose to 4.1%, its highest since November 2021. The rise in unemployment gives the Fed more reason to cut interest rates soon. As the US dollar and bonds fell sharply, the gold, seen as a safe haven asset, continued to climb. Expectations are growing for rate cuts in September and December, which typically strengthen the gold prices. Gold easily surpassed the 45-day simple moving average of 2,243.6, breaking a key technical milestone. The bulls pushed through the resistance level of $2,368, boosting confidence. The next targets are 2,387.7, 2,388, 2,400, and the all-time high of $2,450. Short-term support is at 2,368.5, with further support at 2,243.6. If prices fall to 2,300, a reversal could target $2,291. And that is the end for today's daily analysis. Thank you for watching and have a nice day.